Go get them. All right, good job. All right, please. There we go. All right, go get them.
Hello. Welcome everyone to this panel talking about halving and spot ETFs, and kindly hosted by liquidity tech providers and Gate. I said I'm the head of Asia for Kaiko. We do market data, risk analytics, indices, and research for digital assets. And I'm joined by the panel who were introduced. But just to kind of give you some little bit more color on the individuals and the kind of things that we want to talk about today. Don runs Victory Digital Exchange, aspiring VATP in Hong Kong. He's got a long experience in history, SFC, context, capital markets, Sagante, founder
为证监会的一个工作的经验。Angelina 是在香港是非常有知名度的。那主要是活跃于数字资产方面的交易。那其实他自己也是咨询公司 Stanford Finance Chapter 的创始人。那曾经也是在证监会工作过。还有 Aruliah 是 Wincent 的总经理。那其实他是我们一个非常大的一个对冲基金。那主要是专注在BCB 所推出的数字资产的这种高频交易的策略。那么最后他也是在 Web2 以及金融科技开发方面有着非常丰富的经验。还有 Coinbase， 那 Coinbase Kwan 也是我们现在非常著名的虚拟资产交易托管服务机构之一。那么所以之前也是在渣打银行、瑞士信贷工作过，有非常丰富的传统资产金融的经验以及虚拟资产的这些经验。那所以对于我们今天的这个讨论来说，我们看到我们整个观众也是来自不同的公司。那我们也会看到，在这个行业正在发生非常大的一个变化，产品变得越来越精致，更加的规范，也值得信赖。所以在这样一个广泛的背景下，我们可以先来讨论一些话题。那么首先，那就是对于我们机构来说，有一些监管和合规的因素需要去考虑。那特别是在提供虚拟资产的托管和银行服务的时候，那所以在这一方面，在监管和合规方面，我们需要考虑什么样的内容？谢谢，非常感谢您的提问。那确实，对于这个数字资产来说，在过去的几年当中，其实成熟的非常快。因为几年前我们都不会有这样的一个圆桌讨论，就这个议题来专门展开讨论。那所以其实我们会看到，香港它
and is far ahead of other international financial centers. Regulation moves actually quite quickly, especially when compared to how it moves in other asset classes. So institutions usually don't operate just in one jurisdiction, they usually operate globally. And while the regulators across the world are addressing this with the same goals in mind, they go about it in slightly different ways as per their mandate. So what institutions have to do, they have to sort of like find their position in a rapidly evolving asset class with a rapidly evolving regulatory framework, and this is evolving differently in different jurisdictions. Against that background, first of all, they would need to understand deeply the asset class they're getting into, and this is the technology, the governance. They need to cut through the hype, they need to find out who really knows what they're talking about, because there's still people in this asset class who talk a big game and know very little. Trust is a very, very important aspect, and this is very interesting because when you look at the premise of Bitcoin, for example, it is a trustless network. A lot of the people who are digital natives talk about not having to trust the counterparty, but trust is really, really important in traditional finance. And they need to balance certainly what their clients want, what is commercially viable, with what is compliant and what can you do as a regulated entity. They would need to partner with the right regulated, audited and compliance-focused companies as a counterparty. As part of the development, recently the HKMA here in Hong Kong issued guidance that they would allow banks in Hong Kong to offer custody services, and they would even be thinking about letting the banks outsource this to SFC licensed virtual asset trading providers. But this is a great move, but it beckons the questions, are the banks actually ready for this? Are they set up technically and internally? And we'll be talking about a lot about the retail-driven previous bull markets and the current more institutional-driven bull markets. We'll be talking about, for example, derivatives. But I'll leave it here and hand it over to Angelina to add on to that.
No, what Donald has just said is so true, and it's such a great backdrop. But what's happening also is there's a consultation paper out with HKMA right now to exactly talk about the exposures. And I said to the lawyers that were writing our response back to the HKMA, you know, in the space of the next 2 to 3 years, I will bet anybody here a coffee somewhere, and I will say that there will be banks buying up Fire Blocks, there will be banks buying up Matarco, and in fact Ripple already bought Matarco. So they're going to be buying more and more custody companies, and this is going to be a change just like what you're seeing in traditional finance moving into crypto. The other area though is the SFC, Japan, Hong Kong SFC, Japan FSA, Malaysia, Singapore, everybody is now launching digital asset regulations. And custody is a very, very big part of this, so much so that the International Organization of Securities Commissions has already set out 18 recommendations. And the biggest set of those recommendations have to do with custody and safekeeping. And I think this is a part of the fact that with FTX collapsing, I don't think anybody, and no regulator wants to deal with that again. So if you haven't gone to see this, you should go on the IOSCO website, because it's going to be the blueprint for every regulator around the world. And it's just a matter of time before every regulator around the world launches digital asset licensing or digital asset rules for everybody to follow. So the question though is for custody. I mean, basically the most simplest thing is you have to segregate your assets from those of your company as well as your clients and have proper record keeping. So if you can't even do that, there's a whole list of other things I'm not going to go into, but please do take a look at those rules. It's very, very important, because we do not want another repeat of FTX, and happy to talk more about that later.
And just to add on to that, the focus of the SFC in Hong Kong on custody is one of the reasons why Hong Kong is so far ahead, because when Hong Kong launched that regulatory framework back in 2018-19, most other regulators only looked at AML, KYC, and a little bit of cybersecurity. And the SFC was the first one in the world that also looked at custody, or mainly looked at custody, and said it's not about only AML, KYC, it is about investor asset protection. And that's one of the reasons why it's important.
So can I ask you both a question, because you both have experience with the regulator, and we have this oddity in Hong Kong where custody is a mandate of the VATP, the exchange, and in most other developed markets, there is a delineation between the venue where prices made and custody depository. And so there's two outcomes, either custody eventually goes to the bank, or custody becomes a regulated activity in the future. Where do we think short-term, long-term that problem's going to be resolved?
Short term, right now, it's with anybody that's licensed by the SFC. So Victory, for example, will have to have a full custodian, as did I came from Hashkey. We had to have a full custody system in place. Now, what I make a prediction that in a few years, once we can change the licensing and change the rules, this will be halved off, and there will be people that are experts in just custody, or the banks will buy it.
Yeah, I couldn't agree more. I mean, in any developed market, running an exchange is fundamentally different business than running a clearinghouse and a settlement. And it wouldn't go too far and too long and why it is right now. Let's just say the only way the SFC could have a handle on custody was to combine both back in 2019. But surely it will go towards a more, maybe initially as an intermediate stage, a bank, and then eventually maybe something like CCAS in Hong Kong, DTCC in New York, Clearstream in Europe.
But it will take a lot of time for HKEX to change its central clearing to actually be able to handle digital assets. So it'll be interesting to see if they move into this or where they're going to go with this. But digital assets are something definitely for Hong Kong because we're going to have at least 7 applications are being processed right now. Which is what we believe. I don't have any special information about this, but there are 7 ETF applications out there being processed right now to be traded on the HKEX exchange. So
it's interesting. Brings up the kind of interesting question: is if you've got an ETF and you have the spot hedge it, do you have to custody it with the VATP, which is an exchange, and all those kind of things? And then of course, why are we not self-custody? But probably we can talk for a long time about that. So there's a couple of other questions I want to ask about regulations, but we'll come back to that at the end of this time. If I can move on, perhaps start with Chris, there's a kind of general question. It's a fact that there's limited banking support for firms that are active in cryptocurrencies. That's a challenge for both retail and institutional investors when they want to have a banking relationship to support their activities. How can people address that, and what are the changes or progress that we're seeing? Chris, if we can start with you.
Yeah, thanks very much, Sean. I think banking has been a challenge for us in crypto for many years. One of the jobs I had when I was at Bitstamp was to solve banking. And I went around and talked to a lot of banks, and you knocked on the door and they said, yeah, no, thanks. We eventually came across a company, BCB Group, tiny company at the time, but they were pioneers in providing services to firms in the crypto space. If we roll forward to today, so that was back in 2018, things have moved on a bit, but not a huge amount. And yeah, there's still more to do. There are good institutions out there that are trying to serve the space, but if I speak from a perspective of an institutional player that needs banking, we have a few good bank partners, but it is really a handful. We are talking to some of the traditional banks, and some of the larger banks are exploring it. And I think over time we will get there, but there's a few things that hold them back. So number one, regulatory clarity. I think we've sort of touched on that. That regulatory clarity is coming, but until that comes in a very clear way for banks, it's difficult. The second thing is compliance. Compliance still says no, and for good reasons in some cases. And then number three, the opportunity to risk ratio from a commercial perspective. If I was a senior banker and the team in the bank that's looking after crypto and blockchain is coming to me and saying, we need to provide services for this space, I'm looking at it and saying, well, for the perceived risk versus the opportunity doesn't really cut it for us. So until those three things change, I feel we'll be making slow progress.
Which is interesting, given that without exception, everyone, all traditional finance and crypto, believe that the technology is coming. And yet everyone's saying, what's the opportunity? Anyway, I'd like to follow on from what you said and ask Angelina kind of a follow-on question, which is, anecdotally, 2 weeks ago, I was told of a traditional finance firm who was thinking about coming into crypto, and when they mentioned that to their existing bank covering their existing traditional business, the bank said, that's interesting, we'd like to close your account for the traditional side as well. And so in Hong Kong, like I say, is it a fact on the ground that the banking community here is open for business, or is it still a challenge? Your kind of thoughts on that?
Thanks for the question. I have to say, the HKMA has actually taken steps. Now, I don't work for the HKMA, but I have been in a number of meetings working with them to try to get them to be more comfortable with banking and crypto. So in June 2023, I have a list here of all the fintech banks that will accept crypto clients. And it even gives their names of the main contact person. Now, it has not been updated, but I do have this list here. And their market conduct division did actually put this out and have been working with all the banks to get them comfortable. Now, for those of us, I mean, we come from a regulated background, but for those of you who actually are in crypto, if you're going to see your banker, don't go in a t-shirt. Get your papers ready. Get all your ID cards ready. Have a complete package ready to go talk to your banker, and make sure you put in your best foot forward, because this is something, I mean, appearances do count if you're going to set up a bank account, and make sure you have all your corporate information. So many times I have seen my friends that are trying to open bank accounts going, oh, I got denied. I said, why did you get denied? I didn't have the ID in place, or I didn't have this in place, or I didn't have this in place. It's like trying to get an apartment building. If you're going to rent, you want to look your best to go see your banker and make sure you have everything in place. So HKMA, I will mention this today to the HKMA, to the Market Conduct Division, to please update this. But there is a list out there that is available for all the banks, and they do have fintech contact points.
Thank you. Don, you have a view?
Yeah, I totally agree with everything. I mean, it takes decades to build a reputation, and it takes seconds to destroy it. So any bank, and banks by themselves as an entity usually aren't the fastest moving animals in the world anyway. And like you said, Chris, I mean, if you look at, from a business perspective, the size of a crypto client or digital asset client versus all the other clients, it's minuscule right now compared to the rest of the business of the bank. So would anybody stake their career and their reputation on that? Yeah. Debatable. And then, like you said, the industry also needs to take a look, and a hard look at itself, how you approach banks. And like you said, I had experiences where banks told me, it's really refreshing talking to you because A, you dress the part, and B, you have all the documents we asked for. And I said, well, isn't that quite normal when you engage with a bank and want a bank account? But apparently not so. So, and just to your point on the HKMA, I think one of the big advantages and strengths that Hong Kong has today is that the regulators are working together, the SFC and HKMA especially, and when they identify an issue, they actually take action, like roundtables last year and so on and so forth. And that's something you don't necessarily see in other jurisdictions. One of the things we have in Hong Kong that isn't available somewhere else.
They truly have been very, very proactive, and the HKMA is out there trying to help in terms of other projects too, like the CBDCs and e-Hong Kong dollar. So please do look on their website.
I agree. Hong Kong is an interesting place. Moving on, Wilson, if I may come to you next. So, you know, cryptocurrencies, they're evolving. They've got new types of digital assets even within that broad classification. And so when you look at custody provision, of course, a large part of your business, you know, what should institutions who provide this type of service think about when they need to accommodate this kind of continuing innovation, but at the same time stay regulatory compliant?
Yeah, thanks, John. Good morning, everyone. Great to be here. Great to be back in Hong Kong. A lot of clients or prospects ask us to think through what are the most important considerations when they choose a custodian. And there are sort of few general but important things that they should look into. So number one is to work with a compliance-focused, audited, regulated custodian with a long track record of keeping assets safe. So if you're a custodian and you don't keep assets safe, then I think your key value proposition is not there, right? Number two, we ask these prospects and partners and friends not to underestimate the difficulty of working as a crypto custodian, or the things that a custodian has to think about, and there are many, right? It's neither easy, no straightforward, and in our view, we've seen a lot of this. If a firm doesn't take the due diligence seriously in the initial phase, then the chances are they could end up having to rewind and choose another custodian, which could end up taking, in the institutional world, 6 months, 9 months, or sometimes like a year plus, which is hugely costly, both from like a human resources, energy, or other perspectives. The final thing I would say is a custodian has to have good technology. So we have to remember cryptocurrency is at its core a technology. So having cutting edge technology really helps. Things like advanced user permissioning and consensus, so that your assets aren't access in an unauthorized way. And things like just basic things like having a lot of assets to choose from and staking support really adds to the bottom line for these companies. And lastly, I think generally speaking, having a good legal setup from the custodian side, good insurance policies, having a good compliance policy and understanding, all those things contribute to a good custodian.
Thank you. And if I may kind of tail off that and ask a question of Angelina, we see firms like Coinbase Prime who are operating at a standard which you would generally regard to be sufficient within a traditional finance framework. And at the same time, we see banks, particularly in Hong Kong, are considering coming up the curve, but they don't have domain expertise and they don't have infrastructure yet. It's a kind of, guess the future question. What do you think the likelihood is? New entrants like Coinbase Prime take the market in custody, or banks, kind of get their game together and, kind of fulfill the role that they would traditionally have fulfilled from a custody point of view?
I think we're going to get a combination. We're going to get the strong get stronger with banks acquiring custody. And as I said, Ripple just acquired a custody firm. And you're going to see custodians actually become strong enough to be on their own. So hopefully our Hong Kong legislation will be changing to allow for a custodial license. The interesting thing it will see is HKEX, as we all are aware, are a monopoly. They have not taken over the monopoly status in the clearing yet. They can if they want to. So if they were to increase their services and bolster the services in digital assets, they could be a very, very interesting area for increasing business, money, and their share price. So I foresee that HKEX at some point will be looking at that as a possibility, especially as we see around the world. What do you think, Don?
As always, couldn't agree more. I think we will see inevitably a move towards institutional regulated places, trading platforms, exchanges in the world. There'll probably be a handful. Price finding and liquidity will be concentrated on those. We will see, as you said, we will see strong entrance from sort of like the digital space, and then we will see open and flexible, strong participants from traditional finance, and they will meet somewhere in the middle, and there will be a huge wave of merger and acquisition going on, and then we'll probably see a group of probably not more than a dozen champions across the world, where the liquidity will be concentrated, where the price finding will happen, and then liquidity begets liquidity and so on, and then institutions will just trade on those.
Right, which is interesting in the context of the egalitarian ideal of blockchain being apparent, But anyway, life is...
only the big survive. That's the issue.
A messy compromise. I'm going to, if I may, panelists, skip question 4 and on to 5 only for time. And so if we can kind of jump onto, and we may, if we have time, we'll come back to question 4. But for now, the question is... there's the Bitcoin listing of ETFs in the United States. There is a significant surge in popularity, a rapid inflow of funds, and its impact on price and liquidity in Bitcoin. So, what factors contribute to this rapid growth? Is it sustainable? And then the question I'll ask in a more broader sense afterwards, which is, what does it mean for an analog in Hong Kong? So maybe, Chris, if I can start on the topic of the ETF.
Yeah, thanks for that. So no doubt it was a momentous event. I think all of us were anticipating a successful launch, which it clearly has been. Net inflows to all the ETFs in Q1 have been $12 billion. BlackRock's ETF has seen the largest of those inflows. I think there's a few things. So firstly, it's not just the ETFs themselves, but it's who was the primary driver, or which firm was the primary driver for the ETFs, being BlackRock, and seeing Larry Fink on the news and talking about Bitcoin and talking about the ETFs. I mean, certainly, I never dreamt that we would be seeing that, and obviously, it's great for the industry. When the ETFs launched, as a trading firm, as an investment fund, I wish I could convey to you what it was like in the firm the day of trading when the ETFs launched. And the only way I think I can describe it is if any of you watch the Star Trek series, and whenever there's a kind of emergency, there's like red alert and there's a lot of stuff happening. That was kind of how it was. And what's been driving this, I think, is the interesting thing. So if we look at the last bull run, it was primarily driven by retail investors. And I remember quite clearly when I was at Bitstamp, I think every friend was calling me up saying, how can I buy some Bitcoin? Yes, there were institutional players coming in and obviously big names, Elon Musk and MicroStrategy, etc. The difference this time is that you've got hedge funds and asset managers who are the buyers. And now they have a vehicle that gives them exposure to the asset class and in a framework that they understand and that their compliance teams can sign off on, etc. So it's a big shift that now we have Bitcoin in a vehicle that traditional firms can finally access. And that, I think, is the big change.
Thank you. And I'm going to come to Wilson in a second, but I'm just going to prompt the audience to say we're going to jump to questions straight after Wilson, maybe particularly in the context of Hong Kong and its ETFs, theoretically, that might be approved. So get ready for your questions. But to Wilson, so of course there's this narrative, of course you're relevant, of course, in the US, but also there's the halving coming up, and your kind of views on, like I say, the whole ETF dynamic and whether that narrative overrides the halving or not.
Yeah, this is now the fourth halving for Bitcoin. I think we're going from 6.25 Bitcoin to 3 1/8 Bitcoin per block. I think this is a really relevant event. I think with studies done in the past, there's been a lot of them that been able to provide some insights. However, I think the sample size is quite small for these studies, so it's very hard to generalize what's going to happen based on those studies. At the same time, we have to acknowledge that every time the market dynamics are a little bit different. So for this time, I think the macro conditions are extremely different. I think the progress in the US ETF space could cause some changes. So it's hard to imagine like this halving mirroring the previous halvings performances and results. With that said, we think the market dynamics are such that right now, there seems to be a little bit of imbalance in supply and demand from miners and the demand from the US ETF side. So certainly, the market structure seems to be suggesting that, the price could go up potentially as a result of these market imbalances.
Right. Yeah. And I had a kind of thought was this: the relative impact is, for example, were an ETF approved here, would that have more of an impact one way or the other than the halving itself? But anyway, this is for the debate. Can I ask if there are any questions from the audience that they would like us to kind of give opinion upon? There's one there, if we could get a mic over to them. Anyone? I can hand my mic to them myself, but... And there was one there, question. You want to give a mic to the gentleman? He can... I think the gentleman in the middle left, there's first, and then the second guy's there.
Morning all. It's Nick from GFOX. Just a quick question on regulations. We've just heard Duncan talk about all the regulations being in place except for the custody. And we've just heard Chris saying there's a lack of clarity on regulations from the bank. What I want to understand is where's the disconnect between the two parties?
There's no... For regulations from banks, it's actually quite clear. In terms of banks are allowing their banks, the banking regulator, HKMA, is allowing banks to actually offer crypto or crypto firms banking accounts. So it's very clear there that they're just a regular customer. So that's fine. In terms of custody, the custodian right now, that license is under, like Donald is getting a license right now for his firm, Victory. So it's under your license as of now. Now Duncan, if he's still here, is thinking about working on a project that I'm really interested in, and I just volunteered to help him, is to make separate legislation for digital asset custodians. So this is something that's still not out there yet, but it's something being mooted. It's just finding the right appetite to be able to do this. And remember, when we put in legislation, it takes time, and it has to go through passage and so on and so forth. And who is the right regulator to do this? So that's just my view. It is very, very in its beginnings right now. Yeah. So I would just take it as something that might be happening.
Yeah. Just to add on to that, let's not forget that regulation in other asset classes has evolved over decades. The SFC was quite quick to understand that they could probably very easily regulate digital asset or virtual asset fund managers, so that wasn't really a debate. 2018, 2019, that happened quite quickly. At that time, they weren't even sure whether they could regulate virtual asset trading platforms or platform operators. That has now stabilized. We now have a VASP regime under the AMLO. There have been further specifications on distribution, on omnibus accounts, coming up on OTC, and so on and so forth. Next up, hopefully, the market would expect would be derivatives. Obviously not a ridiculous 50x gambling style, but rather
100x.
Ridiculous. Rather institutional risk management tools. But that's coming, that's evolving, and this is a complex asset class that needs to be very carefully regulated. For the banks, I agree, it's quite clear actually. At least in Hong Kong, the HKMA has been very, very clear. And the banks themselves, for the risk considerations that were mentioned earlier, need to understand how far they want to get into this market.
Yeah, I should qualify. I think regulation going from west to east, so it's clearer here than it is, say, in the United States, and then Europe somewhere in the middle. If you look at it from a global perspective, I do agree the regulation is very clear here, and the banks do have clear guidelines on how they can operate. Even still, and going back to the banking question, it's still difficult to get those bank accounts. So speaking as an institutional player who tries to open accounts, a bank might serve you for your corporate banking, paying salaries and bills, but when it comes to client funds, it starts to get a bit trickier. So I think that's where the work still needs to happen. That's just my 2 cents on it.
But our industry also needs to be really careful, and AML is really important. And for those of you who know, I used to work for a firm that is still around, but had a lot of issues with AML and had to put in AML controls in place. So we really need to prove to the industry, to the banking industry, that we have AML measures in place. And you know what? It's going to affect your business, but long term, it's going to help the entire industry. Because if you don't have that in place, the banks will not open accounts for you. And this is something that's very, very important.
And in addition, a lot of banks, most banks, don't only operate in one jurisdiction, right? And you might be talking to a team that will be very happy under the Hong Kong rules to open banking relationships, but their headquarters might be in another jurisdiction, and they might decide on a group level that they wouldn't entertain this industry. So there can be any number of reasons for that.
Okay, I think we got time for just one more last question. There's a gentleman down here in second row. If you can come over.
Hi, thank you for that. My name is Tom, and I run my own. Is it open? Okay, and I got my own fund for running, and got a question because I heard some rumor about the in-kind creation and redemption of a spot ETF in Hong Kong. Just want to check if there are any rumor or the status. How's it going? While Angelina, you're meeting with the HK government. And I also want to check what's your view about how the in-kind creation Bitcoin spot ETF will operate as the counterparty to the cash creation and redemption US spot ETF. Thank you.
In terms of the license applications, I have heard, and talking to some friends that have applied, the gossip, so I'm going to really qualify this. The gossip is there are 6 to 7 applications that have gone in. I have not put my friends or our friends, I do not want to put them on the spot. So we have not asked them, we have not confirmed this, but based on the people that I've talked to, there are applications that have gone in. We were both preparing for this panel earlier this morning, And we both think that eventually this will definitely come through as a product. Do you want to add to that?
Absolutely. So some things I can't talk about because they're part of an ongoing application, but the fact that you can do in-kind creation and redemption in Hong Kong is going to be a huge advantage over other jurisdictions. It obviously then creates questions around AML, KYC, KYT that need to be addressed. It obviously, like you correctly pointed out, creates interesting scenarios around who's going to be the counterparty for the redemption or creation and how you're going to do that. But all the applicants have to solve for that. So you can rest assured that once the ETF is launched, that there will be a very strong, robust mechanism behind it to do it.
And I think just in summary, certainly us and certainly other people, of course, asset managers and brokers as well, have reflected to the SFC about some of the challenges, and I think this is the fine detail of the problem, which has yet to be solved, but is going to be solved relatively easily because you have the financial market of equities where there is a perfect analog for it, but different problems. Anyway, we are out of time. I would genuinely like to thank all of the panelists for their insights. I'd like to thank you all there for listening, and of course our host for hosting the event. Thanks very much.
And thank you, Sean, for being the moderator, the best moderator. Thank you.
Thank you, Sean.
Thank you.